But the gray is the worst scenario of all for cryptocurrency. And I honestly think that's why crypto has underperformed the stock market in its recent bounce, is because I think this is going to turn out to be one of the longer bear cycles that we've experienced in a long, long time, mainly because if you look at the past bear markets, they've been shortened because of the Federal Reserve printing money, right, and stimulating, and the government stimulating. So I think that without that, it puts us in a kind of a serious situation that this could be an extended bear market. Now, a bear market is never fun, but it does offer opportunities. And I do think you will get multiple big rallies, 5, 10, even 15% rallies from low pivots. But again, it's going to be a stock picker's market, and you got to be nimble. Yeah, I actually so end of year, I think worst case we're going to 3,400. So I mean, I don't mean to be the bearer of potential negative news here, but if we actually just take a look at this chart, this is the S&P chart, the S&P 500. You can see that massive rally that you were just talking about, that bear market rally. And then look at how quickly we've given it up in less time. Now we have hit some support right in here. You can see these little pivot points. So this does mean that there is a chance we could get a short-term bounce here. But I'm still in the camp that I think, thinking about what the Fed is doing, how they're now unloading their balance sheet, they're raising interest rates, and they're likely going to raise at least by another 50 basis points in September. I think that you could, by year end or early 2023, retest the March or February 2020 highs right here before that COVID dip. So that's my target. And again, end of year, early 2023. Yeah, so near term, it's more that these headlines will trigger people to say, okay, governments and maybe central banks are willing to still step up and stimulate if things get too rocky out there. I think that this is just the very beginning. And if in the article, it talks about very minimal kind of intervention. But the point is that if they're already willing to kind of come in a little bit, what happens when things get worse, and how many other central banks, how many other governments are willing to come to the rescue as you see the population start to kind of create this uproar. And again, we've seen this time and time again, how the more rough the period in the economy is, the politicians which have to be reelected, well, guess what? They just look at a 4-year span, at least here in the United States. So they're like, well, we got to print because I need to get reelected. And you'll see more and more of that. Now, I still think there's a rough road to go, but there will be a pivot point where you even see the US, the UK, Europe, Japan, they're all going to start to do this. So I do think, just like we saw a jobs number that came in a little bit better than expected, kind of in that Goldilocks range, I do think you're going to see a continued kind of relaxation of the CPI numbers. And I think that's going to give the Fed that ability to say, hey, listen, we're still going to keep the pedal to the metal. We're still going to do 50 basis points in September. But I think you're going to see the economy weaken more and more towards the end of the year. And they're going to back off to the point where my guess is only another 25 basis points into year end. Now, the problem here is, number one, that's going to be viewed as very bullish for risk assets in the near term, until we slip into a recession. And the market and all the investors out there, they look around and they say, okay, Fed, we're in a recession. Come get us out of this now. And the Fed's going to say, well, it's not a depression yet, so we're not going to, with inflation still at 4, 5, 6%, we are not going to print, and that's going to freak the markets out. The market is so addicted to knowing that the Fed is like the parents, right? And they have this little kid, and they, the kid falls, and the parents kind of just catch them. But at some point, the Fed is going to be hand-tied here, handcuffed, and I think that point is coming late this year, early next year. Yeah, so I mean, today is definitely, on a technical basis, not a great situation. Now, I will give Bitcoin credit, right? We've seen the dollar continue to ratchet up day after day after day, and Bitcoin was just going sideways. So you could actually say, okay, Bitcoin was holding up. But I look at today's up move in the dollar as potentially the straw that broke the camel's back with Bitcoin. It's just so much pressure from a rising dollar and risk assets. I mean, we've seen the stock market rolling over, and Bitcoin for the last 10 days or so has just gone sideways. So it was almost inevitable, if the dollar was going to keep going up, that at some point we were going to break down here. And you could see a nasty red candle here. Now, we do have potential support coming in around 17.5. That's going to be a big level. That's the June low. But my guess is that could be where we're headed at this point. But again, I was optimistic the last few days, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming out of the sails, if you will. Yeah, so I do think that it's going to be some interject too, and I think that what's important here is price action, right? And
Yeah.
and basically what you saw on Friday. So Friday afternoon, we heard about Nord Stream 1 being shut down and how it
Down
was
to
going to be
zero.
very detrimental. Right, zero, right, 100% zero. So one of the things I looked at there is I was like, okay, well, natural gas should be surging, right? And natural
Hmm.
gas did not. In fact, it was down that day. And if you look at today's chart, you are seeing a big collapse in natural gas. Natural gas is down almost 9% on the day. And as a technician, I say, okay, well, the market's basically calling the bluff here and saying that right now they're going to figure out alternatives, and Russia's not going to have that ability to kind of be able to get Europe to throw in the towel. So very
Interesting.
interesting here to look at price action. Yeah, so I have it penciled at only a 50 basis point in September. And I think, again, the last jobs report gave the Fed that little door opening. And I think the Fed is very aware here, right? So the Fed is aware that they can't stimulate if they push us into a recession and it gets bad. So even though they have to talk a tough game because they have to keep expectations high so the equity markets don't surge, and which creates more inflation, they also can't overdo it. And I think they're looking to kind of take a back step. Now, remember, they've just started this month unloading their balance sheet. So, in a
Hmm.
weird way, that's tightening as well. So, they have to be really careful here not to do 75 basis points, unload $1 trillion from their balance. I mean, there's a lot here that could go wrong. And so, that's where I am at, where I think that the Fed will probably start to do that 50 and then maybe 25 the rest of the year, and kind of let's see how it plays out. I think the
Hmm.
markets have priced in more. So I think there's a technical risk asset bounce that when the markets start to see 50 basis points is only coming and maybe only 25 or 50 into year end, then the markets will say, okay, let's breathe a sigh of relief. That will be the relief until we slip into recession when they're like, oh
Yeah.
my goodness, now how do we get out of this? Yeah, so I do think there's a chance of a flush. And I think the key here is understanding there's a few different things that are mixing. Now, if we take out the 17.5-ish low here, there's
Yeah.
not a lot of support until you get down to 13 to 12,000, which is my high end target for Bitcoin. And the
Right.
kicker here is we have to remember there's still 150,000 Bitcoin, I think, that from Mount Gox that
Sure.
could be unloaded at any one time. That's a lot of Bitcoin, especially when you're at these lower prices for pressure. In addition, I think you have to be very aware that at some point we're going to get news from the judge in the Ripple case. How is Gary Gensler going to say that all these other coins are securities? What rules do they have to kind of abide by? And I think all of these combined with a strong dollar leave Bitcoin and other cryptos very vulnerable to a kind of one of those bigger quick flushes that could take us down to that level. So I do think that level is a huge bounce opportunity. I don't know if we'll get there before we get down to we get the Fed coming in here in late September, but I think it is a possibility. So I think there's still that potential that you could see some upside in Ethereum in the near term. And interestingly enough, the chart has a potential breakout here just above this downsloping trend line. So you can see that and by the way, this is really interesting because what we've seen in Bitcoin is that the low from basically 10 days ago was already breached. But you can
Hmm.
clearly see that Ethereum has actually moved above this trend line and is well off of these lows. So to me, I look at that as a short-term relative strength indicator versus Bitcoin specifically. So I think that again, there's a lot of hype. I think what Ethereum is doing is awesome. I think it's the right move here. And I think ultimately that in the near term, you could see some price pressure to the upside, maybe even retesting the near highs here of 2000 on Ethereum. But again, I would just caution and say that depending on the regulation we find out about, that would be a concern. That would be a risk factor that you'd want to be a little careful over the next multiple months holding on to a ton of Ethereum. I think the immediate reaction is a sigh of relief, right? Okay, it's done. It's gone smoothly. You'll probably see a pop to the upside. And again, I'm hopeful that that happens because I think crypto has taken so many punches over the
Yeah.
last few months. I mean, even what happened with Michael Saylor and the taxes and all that stuff. It's just one more thing that makes people kind of like, oh, what's this crypto? Is it kind of shady? What's going on? So I'm really hopeful this goes smoothly. If it does, you get a short-term relief rally to the upside. Maybe that 2000 handle would be where it goes. In fact, the 200 moving average is just above that double top high there. So that would also be a general target. Then after that, I think eyes turn back to the general crypto market, to regulation, and to
Yeah.
overall risk assets. And I think that's where it could be. So you could get this short-term relief, but then just be careful beyond that if the whole risk market starts to come in. If you look at the permeation in crypto of Ethereum and how many things are built on it, I mean, it's essentially the Apple of crypto. Now, I think you look at Bitcoin, and to me, I'm like, okay, Bitcoin is gold, and now Apple or Microsoft would be Ethereum. And I do think there's
Yeah.
a lot of upside here down the line. So I am optimistic that it does have a shot of it. Yeah, so I think Polygon is definitely interesting, right? And one of the things I've been paying attention to on the chart is number one, the chart of Polygon has had a big move up off of the lows and is actually going sideways, creating somewhat of a bullish channel here. So as long as you hold this lower end around 74 cents or so, to me this is a very interesting potential bullish consolidation pattern for maybe a breakout. Breakout target would be about $1.35 here, which would retest these low pivots. But again, I think that again you're seeing a lot of excitement around it. I would want to see once the excitement kind of goes away or starts to fade. Do these things hold up, and just follow the technical lines? As long as it's within this range or above here, it's good to go. If it breaks that 74-cent level, then you want to be very, very careful. But yeah, so I think that it does create a little uncertainty. We know that we've seen other, during bad periods in crypto, halting of trading and not allowing money to be taken out. That does create this kind of question mark. But I think that it also gives us an opportunity to say, okay, well, then the rally could come in if it goes smoothly. Let's say all of these things get opened back up, and then everyone says, okay, it's done, it's in there. I wasn't able to buy prior, everything went smoothly. There's your buying opportunity. There's your big spike. The big money, and we're talking the big epic hedge fund money, it's all about to them regulation and understanding the rules. And I think that comes down to it. And it sounds crazy, but I can't wait for them just to give us these regulations, give us these rules so that big money can decide if they want to get in or not and make at least a logical decision. But the gray is the worst scenario of all for cryptocurrency. And I honestly think that's why crypto has underperformed the stock market in its recent bounce, is because you just don't have money that big money that was willing to take a shot here. No, I think that the two scenarios, number one, the smoothness of something can be uplifting for the whole crypto sector. So I think that could be a positive thing. But likewise, I think that any sort of hiccups, and you have Ethereum, the biggest alt, if you will, of the group, if they're having issues, what hope do other players have or other coins have to have something smooth? And I do think it's all about, at this point, perception in the crypto market. And if things go wrong with the ETH merge, I think that's a problem. And by the way, I think that's why the merge has been delayed, and kind of because they know that everything is riding on this merge.
Yeah.
So I was in the 850 camp before 2,500. I think 2,100 is my max upside right now. But now that everyone's going the other way, I feel like I got to go for the 2,500. I'm not convinced of that. I think the merge going smoothly can create more downside in Bitcoin, or Bitcoin downside can occur. And then I think that Ethereum can retrace maybe back to a double bottom. It has a small chance of holding that, but I do think that this is now potentially something that can help Ethereum hold up better than Bitcoin. So I'd be in the camp of thinking that, we're so far off that double bottom, which was around $880 on Ethereum. I think that it's very possible that could be when Bitcoin hits 12 to 13,000. That could be where Ethereum goes back to. Very much. I think you start expecting the next bull run when we get in a situation where things have gotten bad in the economy to the point where the Fed could potentially start printing again, or stimulus from the government. That will be the turning point. And again, I don't know if that's 2023, 2024, but that's where I would say that's the turning point. But I honestly don't think the lows are in yet on Bitcoin. I still think 12, 13,000 at minimum, that's where we're headed, just because of the macro structure and all the other issues out there. But I think that, again, you'll see what we usually see is that the final flush will be a quick drop, but then you'll get a little bounce and a lot of sideways chop where you see bulls and bears kind of fighting it out. People say, oh, Bitcoin's not going to be anything. Oh, and then you have other people saying Bitcoin's a great buy here. And you could see that, by the way, back in 2018. We saw a long period of just sideways chop before the next bull market started up. So I kind of expect the same thing. If you look back at 2009, you did see like kind of a consistent grind higher, but it wasn't like a shooting star right back to the upside. So I think my guess is if we get down to 12,000 on Bitcoin, Ethereum probably gets back towards that 800 to 900 lows.